All right, so it is time for another coffee break from One Vision Retirement, us. This month, we are going to be taking a look at life insurance. September is Life Insurance Awareness Month. It might seem silly to many people to have that, but a lot of people don't really understand life insurance, what the purpose of it is, and how critical it is to have that conversation of whether or not it fits with your planning or not. So, this is going to focus a lot on the benefits that are provided through work and how they work, as well as some things you need to keep in mind for any personal insurance. And just as an FYI, Chris and I both started in the insurance side of things. So we do have a lot of knowledge. So if you have any questions on your personal stuff, don't hesitate to reach out. All right, so let's get started. And I share my screen. All right. So, like I said, 5 things you should know about life insurance. Okay, so again, I always go through this, but I think it's important. What is this? Why are we doing this coffee break thing? It's really made for 401k participants. So if you are participating in a 401k and you need some additional help with some planning and figuring out how all this works, oftentimes there isn't a lot of resources for you. And so this is there just to provide you with some how-tos or some things to think about that maybe aren't being brought to your attention. This is supposed to be a very, strategies kind of helping you take care of your future in a very short period of time, 15 minutes max. We're just doing highlights. And then there's always an option to do a no obligation complimentary call if you'd like to. So you can see that at the end of the presentation or see the link below for that. Okay, so who are we? So Chris and I both are co-founders of One Vision Retirement. We called it One Vision because it's supposed to be your vision, the client's vision, right? The person we're talking to, it's about them and what they're trying to accomplish. As you can see, we both have lots of experience working in this field. I work a lot with female professionals, especially I specialize in women who don't have children, as I don't have kids, and there's special considerations for planning. And then Chris actually does a lot on the benefit side. So he is one of those people that will provide some 401ks and cash balance plans and things like that their employers put out. So he knows a lot about what you have questions on, how it benefits you, and how all these things work. So we work well together, taking care of the whole client. Just some fun facts. I moved from Southern California to Arizona about 2 years ago. Love it. No 405 driving for me. And Chris has actually spent a good portion of his life in Arizona, and then we met in Southern California. So, all right. All right. So first point is typical work life insurance. What is that? How does it work? Well, typical work life insurance is typically 2 times salary or a multiple of salary, right? So if you make $100,000 a year and your life insurance is 2 times salary, it's 200,000, right? And so most of the time it really doesn't cost you anything extra. You have the capabilities to add more if you want to, but that's going to cost something. And you get a very discounted rate because they're using a group policy. So you're not going to find better pricing necessarily on the personal side market as the group side, but just be careful because sometimes, and actually I would say most of the time, a lot of this insurance isn't portable. So if you move to another company, yes, you can get insurance again, but make sure the other company offers insurance if you're going to do that. Or if you want insurance for past retirement, for any kind of planning, long-term care, anything like that, that you might be using the life insurance for, that is something that you would want to consider in the long time because it is less expensive, let's say, for most people to get it when they're younger and quote unquote healthier, right? All right. So the second thing we're going to talk about is accidental life insurance. Now, a lot of people don't really understand what this is. They say, oh, AD&D insurance, that's part of my insurance plan. But let me kind of explain to you exactly what it is. I'm going to read something on it. Accidental death and dismemberment insurance is really insurance that pays a benefit only when the death is due to covered accidents, not just any accidents, covered accidents. that cause a death or serious injury. And it's very specific per policy. So you want to make sure, does it cover car accidents? Does it cover different things? If you die of cancer, that's probably not covered. It's not accidental, right? So this is a really great article that Progressive put out about life insurance versus accidental death insurance. I really think it's important to know the difference of that, because I've had some clients, unfortunately, that thought that their accidental death insurance was life insurance, and it doesn't count, and their loved one passed and they weren't getting what they thought that they were going to get. So, all right. Perm versus term. Okay, so a lot of people are very confused about that. I put the perm on there because I thought it was funny. You gotta make life insurance a little funny, right? Otherwise, it's not enjoyable at all to talk about. Perm versus term. Okay, so permanent insurance versus term insurance. What is the difference? Permanent insurance is exactly what it sounds like. It's insurance that you're going to have for the rest of your life, hopefully. If you don't pay your premiums for some of them or different things like that, you could lose the insurance depending on how it's built. But for the most part, permanent insurance is insurance that will be there when you pass at 110 years old, right? Term is something that you buy for a shorter period of term, typically 10, 20, 30 years. You usually choose in those areas. And you will get term insurance for covering a shorter period of time. Let's say you just want to cover your life until your kids get through college. You might do 20 years then, or something of that nature. Term starts off being a lot cheaper than permanent does, but as you get older and need to get more in term insurance, it can be more expensive. And basically, if you stop paying your premiums, they send you some notices. If you decide not to keep it going, it just lapses, it just goes away, right? Permanent doesn't necessarily do that. Sometimes there's cash inside the policy called the cash value or policy value. And sometimes that is used to keep your policy going. And so you want to keep that in mind if that's not what you want to have happen. Now, how much do you get? There isn't, people say, oh, there's a rule of thumb, blah, blah, blah. I don't really think that's true. It depends on what you really want it for. Now, some people, if you just need to have some kind of calculation, will say 10 times salary, right? And that's an easy way to calculate it. However, that's not necessarily the right amount of insurance for people. Everybody thinks it has to be over $1 million, or it has to be this, or it has to be that. It depends on what you're buying it for. It depends on what you're trying to cover. So I really would say that you need to have a good idea of what you're covering. It's like goal planning, right? You don't just say, I want $1 million, and then that's your goal, and then you have no plan for it, right? You just need to know, why are you buying it? What is it to cover? How much do you want it to cover? And then decide from there. And sometimes people go, well, should I get all term? Should I get all permanent? Sometimes it's a combination of both. Sometimes if you need a larger number, like over $1 million, it might make sense to get a little bit of permanent or medium-sized amount of permanent and a medium-sized amount of term to keep the cost down if you don't need all of that for the longer term planning. But it just depends on your situation. But I would say probably the most popular way of calculating it is 10 times salary, even though I don't necessarily agree with that. I know Chris doesn't either. All right. So this is the part I really want to spend a little time on. This is not a conversation that people want to have, right? We're talking about mortality. We're talking about somebody passing away probably earlier than we want them to, that kind of thing. This is a difficult conversation. And so people do everything they can to avoid having this conversation because they don't want to talk about it. They don't want to make people feel uncomfortable. They don't want to feel uncomfortable. And I understand that completely. However, it's a conversation that needs to be had. And the reason is that this insurance is not for you, okay? If you're buying the insurance for yourself, you're the one that's on, right? It's your life that's being covered. You're buying it for your loved ones. You're buying it to protect them. And if anything's important in life, that's important, to protect your loved ones, right? So you do need to have that conversation of, what are we covering? What would you like? And you sit down with your significant other, your spouse, your friend, your family, if you're covering debt, because when you pass, debt doesn't just go away. Creditors don't go, oh, he's gone. That doesn't matter anymore. We don't get paid. They go after your loved ones. So you do need to think about that too when you're covering or thinking about insurance. So essentially, you need to have a conversation of what are we covering? What debt are we covering? Are we putting kids through college? Are we taking care of income needs for a certain period of time? 5 years, 10 years, 3 years, no years? I would say you'd want to cover some years. Are we trying to deal with burial costs? There are policies out there that are just for burial purposes. Is that all you really need? Maybe that's all that needs to be done. So you really want to have these conversations and figure out what it's for. That way you can figure out how much you should get, what type you should get, all of that kind of falls into place. But you do have to have the difficult conversation. Maybe have your favorite beverage sitting with you while you're doing it, glass of wine or coffee or tea or whatever it is that makes you happy in life. Do it at a time where there's no stress. Don't do it after you put the kids to sleep. That's always a stressful time. Do it at a time that there's no stress, it's quiet, and you're able to have a real conversation about it and be honest about what you need. If you feel like you need your spouse or your significant other to cover more than they're talking about, don't be hesitant to say that. I know people think that that's being greedy or whatever it is, but if you have a good reason, you should express that and have that conversation with your partner. All right. So in conclusion, life insurance through work or even personal can be very complicated. They're very, very complicated. And anybody who says life insurance is easy is kidding themselves. And so you do want to go through this with a professional that you trust, that has your best interest in mind and isn't just trying to sell a policy. Really think about reading through the fine print. Nobody wants to do this either, but everything has a pro and con. With permanent insurance, I hear a lot people say, oh, it's too good to be true. No, there's always some cons associated to that. There are some nice benefits to permanent insurance, but there are cons as well. So you need to know the pros and cons to everything, right? Don't hesitate to get a professional to go through these details and find one that you trust. Okay, this is not just some product that you're buying off the shelf. This is putting something in place that is going to affect your loved ones and yourself, both through premium payments, through the benefits, through all that stuff. Find somebody you trust. And if you don't like that person, move on to the next one. Find somebody that you trust that is doing the right thing. And if you'd like to see past videos that we've made, go to our YouTube channel and take a look. And there's more stuff up there. So if you would like that call, if you would like that review, talk about what kind of life insurance you should look at. We probably wouldn't have enough time in this call. It's a 30-minute kind of get to know you call, but we can suss out if we think we can help you at least in that call. Feel free to scan this with the QR code or go to our website, onevisionretire.com, and there's a little link to schedule a call there too. And don't hesitate to reach out. We're here to help and make sure that your retirement and your life insurance planning is stressless. So with that, happy Life Insurance Awareness Month, and let us know if we can help you in any way.